All right. Hey, welcome everybody. Welcome to optionpit.com, your home for volatility, trading, and education. Sorry, I just got a lot of things going on this morning. Our master class is running. Class number 2 is tomorrow evening. Also, our Pro Traders Summit. We have a couple more hotel rooms, I think, available. That is June 4th and 7th. We're filling up fast, and once we're done, it's all closed. Also, as a reminder, this broadcast is for educational purposes only. Options have risk. Trade at your own risk and consult your financial advisor. All right. See, there you are. There's Mark in the SPX. I don't know if it's the SPX or the VIX. I think it's the SPX. We're going to do some live trading. We're going to have products that help you trade better, to actually understand what's going on with the market. You're going to see some stuff out of OptionPit. Actually, we're selling it already, called our Edge Hunter sheets, where it's actually delivering information instead of like a bunch of data coming. All of our stuff actually points you to the trade, and we have a little bit of a little secret sauce in there to help you aim toward better trades and also grade options where things are priced. Flies, time spreads, strangles, and straddles. Everything. I'm not going to say everything, but most types of long and short gamma trades. We will be doing that a lot heavily in our Pro Summit, actually sitting down, see how things work, how things are priced, why the markets work the way they work, in pretty good detail, so you could leave where you actually, you have an understanding of what's going on. Anyway, that's coming up June 4th through 7th. I'll be out there. There'll be a Cubs game. There'll be dinner, and in general fun. And you get to meet Leisha too, which is important. Anyway, what's next? And then April 6th is our Saturday class. We'll be talking volatility. Speaking of volatility, and you'll see some more stuff this week from my vol newsletter. Getting ready for year number 2. It's starting out okay. I think we put on what, 12 trades or 14 trades this year so far. I think we've only lost on 1, so it's good. It's a good start to the year. Importance would be closing. So anyway, as we move forward with what's going on in the market, kind of weird signal stuff, meaning market's down. We didn't get any relief from the Mueller report getting distributed, I guess. So whatever happens, at least it seems like there's less uncertainty about that. Where the more uncertainty is this global slowdown that came out of nowhere. I think 2 weeks ago, the ECB and the Fed here kind of putting the brakes on there, letting rates or whatever, just somehow trying to get back to normal. And it kind of stopped everything. We had that quick, hard rally last week. I don't think that anybody expected, and then everything sort of stopped. Volatility, we traded 12.5. That was 1235 was the Wednesday low mark last week. Actually, it was Tuesday because of Good Friday. And then ever since then, vol's been up. VIX has been up with good reason, because we were trading 28.50 and now we're trading 27.90. We dropped 60 handles in 2 days. We had kind of a violent up day, violent down day. And I still think, to be honest, VIX seems to be underpricing the cash moves in the SPX. Short term, probably doing a little better, but I think you can get very cheap April call spreads in VIX, like ridiculously cheap call spreads. $8, $9 call spreads for around $1. I think those are pretty inexpensive, easy to hedge. And we're not, it's like not really quite sure what the gig is as far as rates go. That messes everything up. So trades, I like kind of long vol with a hedge. We'll probably talk about some funky strangles in the SPY and just, key off the broad market moves. It seems like Boeing is out of the woods a little bit too. So maybe look at Boeing like downside puts to sell, put spreads to sell. We could look at more upside flies. I think Boeing high was 380 something and it's down 30 bucks from there. So that seems to be struggling just a bit. But in reality, the way that I look at stuff is, blue says things are a little bit inexpensive. Although there is a little bit of a jump in price with the midterm, but all the short-term stuff looks priced what I would just call reasonably. So some of the midterm stuff is in the middle. So the market has not basically jumped over the hoop of things are bad and going to get worse. Where I would say is things are, and just look at a simple VIX curve here. This is a little bit older data, but you'll get the idea. Is this, right? This cash was way up here, and now as I look at it, you still have kind of this contango and a rising vol. So they're not, basically the market hasn't called the top and vol yet. That's the simple answer. You still have contango with a rising cash, even though this curve is, it looks like it's really distorted, but it's not. I mean, it's fairly flat. You only have 20 cents between the front and the back month. So it's showing a lot of, the flatter the curve generally, I think for VIX, the more uncertain players are. So we have not got the signal all clear, or we have not got the signal the worst is still not here yet. So I think we sit there for a little bit and, see what happens. I don't know what else the Fed can really say. I think like a trade deal now would be a big deal. Getting the China trade deal now would be a big deal. I think we could have now some weakness until we actually see that. So it won't surprise me if it continues. But overall, VIX at like a 17%, I don't think is very expensive relative. And that is our vol report for the day. I'll see some of you in our chat room later.